Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with the soon-to-be-on Bob Iacchino. How is everyone doing on PCE and Consumer Sentiment Friday, last day of the month? So it should be an interesting, fun day. Good morning, Davey. Good morning, Jacob. Good morning, Patrick. Good morning to all the people hiding in the background. I see you. By the way, if you are new here and hiding in the background and have not subscribed yet, please do ring the bell and hit that like button. That's about it because we got to get to some Bob time once I get through a couple more good mornings. Good morning, Eric. Good morning, Options 22. Good morning, Sterling. All right. Hey, Coco's to the moon. Coco's to the moon, but you're still short Mike and Bob, Coco. So that's okay. And here he is. Hold on, wait. We got Andrew. Good morning, Andrew. Thank you for being here. All right, hiding. Ken C was hiding, and he did subscribe. Welcome, welcome, welcome. Thank you for being here. Let's hear what Bob has to say. We had the PCE numbers out about 35 minutes ago, so I know Bob has some thoughts on that, and I have not spoken to him, so I don't know what he's going to say.
An introduction, Mike. I don't know if you guys are getting like jittery sound. It might be just on my end. Hopefully, you guys can hear me. Um, when we talked about yesterday what the Fed did and what the reaction has been, I said that basically the Fed can't be happy with the way that stocks are reacting because basically it's undoing the tightening. And we're rallying again today. Earnings are kind of trumping inflation fears, but we got these PCE figures. And I think if the Fed had their way, they'd be unchanged, down a tenth. Mathematically, I don't think that they thought it was possible that would happen. But their preferred measure is 2 clicks away from a 7 handle. So again, now if you take this particular number and you cut it in half, okay, it's 3.4. It's 1.4% away from their target. This is a horrible number for the Fed, and Raphael Bostic basically confirmed what I've been saying. Raphael Bostic had a speech early this morning, and he basically said the Fed is going to have to do more with interest rates. So again, I think the Fed removed guidance because their guidance is allowing the market to think, okay, the Fed said that we're going to see rates 25 basis points lower in 2023 with their dot plots. So we can go ahead and rally the market. And I don't think that's what the Fed wants. So looking at it from that perspective, you take what Raphael Bostic said, the country is not a recession, but the real question is whether current conditions are creating hardship. Inflation needs to be addressed. Rate hikes could hurt job growth, but so far seems the momentum is for continued hiring. It's possible to control inflation while limiting the number of families who have really bad outcomes. The U.S. is always a ways from recession, though concerned that recession fears could become self-fulfilling. I take that all into consideration, and I believe that the probability of the rate hikes being 25 basis points in the next meeting are going to shift. I think we're going to start to see the 25 basis point probability go down and the 50 to 75 start to slowly rise as there's more Fed speakers. Remember, the Fed was in a quiet period before their meeting. And I think one of the things this PCE does is confirm that so far, none of the slowdown in data has affected inflation. And that's because service inflation is sticky. Wage inflation is sticky. You look at the wage
Yeah,
index, the ECI,
that's
both
what I was
higher,
gonna say. That employment
both
cost,
higher.
wages quarter over quarter, that is a
Yeah.
hot number.
So it's funny because a lot of these things, like you see that Daily FX here puts that as a low importance piece of data, but the importance of data shifts. Okay, the importance of data absolutely shifts. So this is starting to move into the medium to high classification as you see people looking at the wages and saying, are they continuing to rise? Remember, wages aren't falling back if the number comes out unchanged. It has to be negative. Employment cost index has to go negative for something to change. So, yeah, that's it. That's my take. I think the Fed is going to start to be more aggressive, and we're going to hear about it through the speeches, but not in the guidance.
And we do have Jackson Hole coming up.
Yeah, that'll be interesting.
That will be really
Uh,
interesting.
what's the date on that? It's August. Is it August?
It's in
Jackson Hole?
August. I don't have the exact date in front of me, but it's in. I mean, you can let us know, but we have Jackson Hole because that's a biggie,
Yeah.
especially this year. With good morning, Josh. Let me get through. Hey, Sterling, great time for corporate tax hikes and more government spending. Good morning, Anissa. Hey, Tom. I don't even need to put up your comments because we already know what they say. Hey, Christoph. Great to hear from both of you again. Much appreciated. Just dollar Japanese yen will bounce. How'd the wages go up and the benefits go down? Is that a percentage of the total pay?
No, I mean, the headline number went up. Benefits can go down simply because less benefits are offered as healthcare costs go up. So that just goes to show you how much the wages are actually going up. And that's something corporations do is like maybe they won't offer dental. Maybe they'll lower the coverage of their health benefit plan, but they'll give you more money up front. And that's just a mathematical calculation they make. I can pay this person, an extra $5 an hour and save myself $7 in healthcare costs and still get the same person. So that's one of the things that like has never gone down, as Tom says, is healthcare costs have never gone down and they continue to go up and those don't go down. And that's the funny part about it. When I broke down the last CPI number, you look at the live stream, it's either, I think it was on the day of the CPI or the day after. I talked about how one of the problems I had with this particular number is how high some of the things that go into CPI, like healthcare costs, how high they were and how much they affected the headline CPI and how those things don't go down. Thanks for that, options.
Good morning, Lauren. Good morning, Connor. Thank you. Options just put up. Thank you again for everybody who contributes and put stuff in the chat. Economic Symposium on the 25th through 27th of August. So, what's that? 3.5 weeks away.
Yeah.
So, that's where we're looking because that's always, you'll have Powell speaking. So, we'll get more if they're going to give more clarification going into September, or are they going to just keep everybody guessing and it's what you talked about since the market keeps discounting what they're trying to do.
Yeah. But
It's going to be interesting.
I'm currently really happy that I'm long the S&P and long Bitcoin. I keep telling everybody that that's what I did. So, hey, real quick on today's podcast, we're not going to do trades if anybody tunes in just for futures trades because we've got two guests today. We've got Amelia Bordeaux and Cameron Dawson. So there's two guests. So we're just going to do interviews, but we're going to tweet trades out. So I'm going to put together a tweet. Jim and I are going to put our trades on there. And I'll probably release it before the podcast episode. Maybe I should wait. I don't know. Doesn't really matter to me. But we're going to review the Bitcoin trades and the other trades that we're currently in. I talked to Mike about this yesterday, Coco. I'm never really bullish or bearish, ever. I could care less which direction the market goes. This is an honest statement. I actually talked to Mike yesterday, and I'm like, I don't care. Like, if somebody says, are you bullish? I'm like, I don't know. Let me look at a chart. Somebody says, are you bearish? I'm like, I don't know. Let me look at a chart. I could care less what direction the market goes in. Don't care. Put on the trades that the price action gives me, and that's it. Don't really care. So that's another one of those titles like recession. It's like, honestly, who gives a shit? I certainly don't.
Also, it's all a matter of time frame.
Yeah.
See, this is what people keep confusing. It's like if you're bullish, every day should go up. No, you can have bearish moves in a bull market. Again, you can have bullish moves in a bear market. And the people confuse time frames all the time. And that's what matters. Yeah, they released PCE. Let's see. Bob, you have any thoughts on? I'll read Sterling's comment, but do you have any thoughts on consumer sentiment and if that will have any effect on the markets?
So consumer sentiment is actually a really good indicator of it's as good, if not better, the 2-10 spread to recession. So they actually, or let me rephrase that to GDP changes. So if consumer sentiment bumps up, overall, it will move to GDP might bump up a little bit. And if consumer confidence heads lower, GDP heads lower. If you put those two on a chart, they're really tightly correlated. They're positively correlated. So from that perspective, I would say probably yes, but earnings are kind of overshadowing everything right now, which they should, because earnings have been mixed, but they've leaned strong, especially in the companies that matter, like Apple. And it's funny, you look at Apple, who has a good report, Amazon, who has a fantastic report, Intel has a garbage report. Um, Three really big companies, Apple and Amazon, make up 10% of the S&P 500 total. Um, so yeah, it could have an effect.
Uh, Coco wants to know your targets on your S&P 500 and Bitcoin trades.
I gave the Bitcoin target yesterday, Coco. You were too busy screaming. You didn't listen. Bitcoin target was 26,400. S&P target, I got to look. This is way too small. Hang on. I never show these on my face. 4150 on the S&P.
4150 on the S&P. There you go.
Yep.
So there are Bob's targets.
Oddly
Bob,
enough,
so even
that is
after
the end of the clear path move on the daily chart. Again, what the charts tell me. Now, I could lower it, but if I lowered it, I mean, I could have lowered it, but that means we already reached the target with today's move. Because I could have lowered it to the lows of the congestion move at the beginning of the clear path. You
the
know what I'm talking
breakdown
about.
level that we talk about.
Yeah, the breakdown level. So, but I thought that given how much we've been down, how many days equities have actually been down, Tom, given that, I thought there was probably a little pent up breakout, and I decided to go to the end of the clear path move.
Yep. There's a reason for the targets. It's not just pull it out your butt.
Yeah. So options says, are you still short after, or are you still, what did he say there?
Are you still short-term bullish still today?
Well, I mean, if you want to say because I'm in a long trade and we haven't reached my target yet, that means I'm bullish. Sure. I'm in my target. I've adjusted my stop. My stop has been moved up as the S&P has gone up. So I guess yes. I'm not going to get out of my trade till either my trailing stop is hit or my target is hit. So yes, if that's what bullish means.
Your target is so close. Well, what was your entry point, Bob?
My entry point was about 39.16.
So the entry point was down here.
Yeah.
So the target now is close, but it wasn't close then. And remember, time frames matter. Again, if you like, all right, Tom's target is 540. What's your time frame and what's your stop? Because I want see Tom. You always put in these targets. What are your stops? Because that's what I want to know. Because you could say my stop is 0 and my target's 540. Well,
Yeah.
look. I can have a eventual S&P target of 1,000, and with a stop of 0, it might take 15 years to get there. But this is what matters.
Yep.
Again, I can put out a call. I'm putting out a call now. S&P 1,000. Stop of 0. There we go.
SPY, by the way.
That's the SPY. You know what? All right, let's take a look at that. SPY. I'm putting out my call right now, my long-term call. We're trading 406. So I'm going with 1,000 with a stop at 0. The risk to reward is better than 1-to-1.
I'm going 1,100 with a target of 0.
Okay, so there we go. We are long-term bulls. And I guarantee my stop won't get hit if the markets are still trading. Hey.
Coco, feel free to start buying when my target is hit. You will have missed the move, as you said yesterday, but whatever. I
Hold
don't care.
on. Your stop is 400 on the SPY with a target of 540? Okay. Well, you have a good reward to risk ratio. Bet it all.
Oh God, that's awesome. I love this. All right, I'm going to actually go to work, which is
All right.
my work is not YouTube, but I'm going to go to work, and I will see you guys Tuesday afternoon. If something crazy happens, Mike, let me know, and I'll come on again.
I mean, unless consumer sentiment is shocking. But who knows what the market. I mean, there's so much money to get put today with month end stuff and the massive buyback programs on deck today. I,
Yep.
I think there'll be some end of day profit taking based off this weekly move. But so far, there's so much money to go into rebalancing fund flows, pension fund allocations, and stock buyback programs that there is a floor under the market at least through month end, possibly still hanging over into Monday. You're loading up. Well,
Hang on, what is Sterling saying here? I don't have that same. I don't
this
have those.
morning, the 10 years up 1.27 and the 30 years up 0.40. What are the bonds telling us?
I have the 10-year note in the U.S. at 270. It was at 269. Well, it's at 272 now. It's at 269 yesterday. So what's the 1.27? Are you going out a few decimal places? I'm confused.
Or is talking a percentage on were you talking the yields or the actual note themselves? Because the notes have pulled back. So if you're talking the yields,
I've got the yield up 4 basis points on the 10-year, and basically what it's telling us now is what Raphael Bostic just referenced. Okay, you've got inflation numbers that have jumped again with the PCE and the employment cost index. So inflation drivers and inflation readings have jumped again. All right, and Raphael Bostic says more work needs to be done. That's why we're getting this small pullback in the equities right now, is because bonds are reacting to that data and to Bostic's comments. So that's the little bit of a pullback you're getting. If yields go higher, equities fall, even though they never fall. So that's basically what's happening. But, again, I think the Fed is removing their guidance for a very specific reason. I think they want the markets and the economy to be nervous when they do something and to be speculating that they might do a lot more. So you're getting some tech questions, guys. So I'm going to go.
all right. Thank you for being here, Bob.
We're going to watch your longs as soon as I get out of mine. Okay, we're going to keep an eye on that.
Well, you're going to put so much selling pressure on the market. Just make sure the the SPY goes below 400.
Yeah.
Just
Put
go
some
on your
selling-
stop hunting.
I'm going to go stop hunt. I'm going to tell everyone in the industry that I know that 400 is a place where there couldn't possibly be any stops at a round number. That's weird. All right.
Okay. Have a great day.
See you guys.
Hey, there's a little bonus segment with Bob. Bonus segment with Bob. Hey. So, there you, Eric? Yeah, everybody. Let's see. Andrea, quick question. Would you make your bottom harmonic at the 100% line yesterday, the low pivot at the 4 hour? Again, Andrea, it depends on your time frame. Let me go through this also. And it depends on your duration. Now, why do I still have the harmonics from the highs back in the 31st to the lows at the 17th? Because we closed above the 62.5, so I'm still focused on 41.31. Then we have Bob's target, which is the end of this clear path move, which is technically this 41.50, just happens to be exactly 41.50. And then up in here, anywhere in here, is the big reversal play. Again, it's trailing stops from long positions. This was an aggressive buy position and running up here. And the last aggressive buy was back on the 15th of July. So those are the two major buy patterns. Now, if you're asking for shorter term, if you're playing something in shorter term, then yes, your harmonics for shorter term, for pullback moves especially, let me recolor this to purple harmonics matter. Here we go. Purple harmonics matter. Let's make it light purple. So this is on Andrea. Again, thank you for being here. Would you use, so for shorter term, yes. Why is this shorter term? Because this is a key pullback area, and then we had the breakout play. So these are your shorter term harmonics that I will be watching for pullback areas. Right now, we're sitting here testing the 12.5%. Key area I'm also watching going into the open. We're not going to have a lot of time to get through levels today, but overall I'm watching for another push-up move. 4,077. And then since it's still going in end of month Friday, the next area, if we did break down below that, would be the 25% harmonic 4061. The only thing is you have, so on the 4 hour, I need more time, but I can't start much earlier. So you see we have a clear path move on the 4 hour. Here's the breakout zone for a bigger pullback. Now, this is where you go down in time frame and you look at the pausing area to help fine tune this area. So here would be the pausing area. Right in here. You can go somewhere in this area. Again, it's not a brick wall. And then we come back in and you see that's right at this bottom of the 4 hour rotation zone. If we did spike below that, I'd be watching this on the closing basis, but this would be the pullback basis, 4,061. What I'm watching for short term is now a rotation going up into the open. Okay, especially on a move back above. This is the short term. Why? We just broke this little support ledge resistance, but we popped back above that. That's the short term bullish breakout play for the open. I hope that makes sense. So that's see, this is where I'm trying to teach people, because Andrea, I don't know if it's Andrea or Andrea. I'm sorry, I don't want to mispronounce your name. So she's watching for a pullback on the open. So that would be the bigger harmonics. And if you wanted to get more aggressive, this is how you can use harmonic zones. You can go to the early morning. So this would be this key area between the 12 and the 25 with the rotation zone. You don't have much great overlap there, so I'd stick with the longer ones. But that's where I'll use the other swings too if you're really going short term. And you can look for clusters. And then you refine clusters with key price action, because price action matters. So this gives you areas to zero in on. So if you did break down into the open, or even we broke down until let's hypothetically, then I'm going to have to wrap this up. Sorry, not many numbers today. We'll go over stuff this afternoon. But let's just say you broke down into the open before the consumer sentiment number that comes out at 9 a.m. Where's the next level I'm keying off of? Is right in here based off that 4 hour rotation zone and that pausing area. Right in here, and I'll start watching for the rotation play back up. So that's how you put the levels together. Let's just peek in. Bonds triggered this little shorter term. It's really sloppy double, so I'm watching for more of a pause in, notes today. Crude, just getting through a couple things. Crude, now we're hitting, we're softening the rotation zone, but it's starting above about 180. I need a move. Let's just jump to a couple stocks. Tesla pretty much flat going in the pre-market. You do have a double top, but on a push higher, at 866 is the next target on a bullish move higher. If it gets back above this 837 support holds. Qs, the next target is 313 and then 315. Those are your next targets. Right in here, there's lots of key resistance up in there. And your major supports coming back at 307.50. Spiders, we've roughly hit the 407.50. We're above that now. So my next target, remember the 87.5. Why am I using that target? You got to close above the 62.5 2 times. The 87.5 is the next significant target, 410.62. Then above there, you can use the clear path move on this one, which is 413.90 area. And then it would be this 417.50 area, 417.44. You are welcome. There you go, Patrick. Glad I could teach you something. You are welcome, Options 22. You are welcome, Eric. I'll have to take a look at AMD. I got to get prepped for the open. I will come back. We'll do some more quick analysis. And if you have questions, please consider tuning in at 3:30 today. I can answer some more price action questions, and we'll leave the analysis more for Sunday. So if you want to ask questions, tune in today to the live stream. With that, have a good day trading. I'll talk to everyone later. Bye for now.